This is your Swing Alpha Trade Report for March 22nd, 2019. This is going to be a slightly longer report than normal. Right now, the markets are still within a pattern correction period, but you can see over the long term, SPY has been riding this 200 moving day average, this yellow line here, for quite some time. We had a bounce, of course, off of the 200 moving day average here, and it looks like we're actually coming back down for a secondary retest of that moving average. So we did have quite a big sell-off, and I do expect the market to make an even lower low tomorrow. Hopefully we get a rather scary sell-off, which would mark a bottom in SPY. And if we do get that bottom, we will announce to members to start buying up stocks. We're just going to have to wait and see. We'll probably not enter any longs tomorrow. We'll probably start entering them next week if we get the bottoming pattern that we are looking for. Now, yesterday we had the Fed announced that they're raising interest rates. You could go to Google, type in interest rates raised to read about it if you'd like. But this was expected to happen. In fact, there was approximately 97% chance going into yesterday that rates would be raised. Now, generally, increase of rates is bullish because rates are raised when the economy is doing really well. It's to cool it down so it doesn't overheat. And in effect, if the economy is doing really well, that means the stock market will be doing really well. So we're going to show you what happened yesterday at 2 p.m. when the Fed made their announcement. So this is a 5-minute chart right here. So you can see at 2 p.m. yesterday, which is Wednesday, we had a spike and then significantly higher volume than normal from the rest of the day. You can see right here, and this was actually selling volume. We know it's selling volume because, of course, the market sold off, obviously. And then today we had another announcement. So if you look at around 12 o'clock, 12:15, the market had this unusual bullishness just come right in here. This was caused by another announcement, just news. It basically was the Trump tariffs weren't nearly as scary as the media had made it out to be. I need to stress this, and I can't stress this anymore, that the media is not meant there to inform you. It's more of an entertainment purposes. It's going to scare you. You got to also keep in mind that there's a lot of propaganda both for and against the president that's in charge at the time. So you need to turn all of that off. You have to forget what your political opinion is. You could be extremely anti-Trump or extremely pro-Trump. It does not matter. You need to review the news as objectively as possible, take out just the important facts, and then trade those very, very important facts. You do not want your political opinion influencing your portfolio because it's going to cost you a lot of money. You could completely disagree with the policy, but if you feel that policy is going to make you money, you need to make the decision of how to take advantage of that policy. Now, going back to the markets, so that was SPY, that was large caps. We do believe that we only have perhaps a few more days of correction. Hopefully we get that bottoming pattern and then finally a bounce. Next we have small caps, which is IWM. Let that load up here. So IWM is a very similar pattern. I think worst case scenario, we could see IWM go down to maybe 148.5 around here before it bounces, but it could also bounce much higher up as well. But that would be the worst case scenario. I do not expect it to go below the 200s at all. Next week, Qs had been doing much better than the rest of the market, actually. And at one point, it was significantly higher than the other indexes. Right up here, although within the last 2 weeks, it's already lost half of its gains that it made on the year. I actually had a prediction a few weeks ago that it would roll over and come down, and we had a sudden stop and a fake out. It actually went to all-time highs, and now it's actually rolling over again. So we could actually see it come down to maybe 156 or possibly 160. There's really no way to be sure. But I do expect it to make a possibly lower low here before we get the final bottom in this correction. Next, we have oil, USO. Oil has been showing some rather bullishness. It's been bullish for quite some time, nearly a year now, actually. And I was even considering buying it for the last few days. Starting as low as here, I was considering buying, going long, but just something's not quite right with it. And I decided to just pass. Now, we could see it go up to around 1350. I would not be surprised. But it just wasn't acting normal for a bullish stock. So I just passed. Next, we have financials, XLF. So financials, let's let that load here. So financials, again, a similar situation. We have this rolling over pattern. I could expect it to see it roll down as far as maybe 27 here and then bounce off support. I would be surprised if it went below support and then held and then continued down. I would actually be looking to buy financials right around here and using a leveraged ETF, for example. I think it was FAS off the top of my head. Next one we have Energy XLE. Energy actually sold off quite badly during the correction and it hasn't really recovered. If you go back to my old videos, you even say that I called a top up here around this time because there's just obvious resistance. So you could check my video at that time, and yes, I did call that top, but I didn't short it, so it doesn't really count. It only counts if you actually take the trade, right? So right now, energy markets have been straddling the 200s right here. I really don't know which way it's going. I even considered going long yesterday. Good thing I didn't. It's sold off today. I'm really not sure, but I can't see it going down much further from here. It might turn down a little, but I'm pretty sure that this is the worst of it already. And then lastly, we'll do biotech. We'll review IBB. This is just the biotech that I prefer to review. So biotech IBB has been riding the 200 moving day average for over a year now, a year and a half, and we're coming back down again. So I do expect this to be somewhere an area where I would expect a bottom, and we could consider going long for a bounce. If we do decide to go long, we'll issue an alert to alpha level members, and we'll probably use a leveraged ETF, which would be LABU. All right. Now we've entered in two trades. Both trades we entered in yesterday. We usually sometimes like to delay our trades by a day or two just so alpha level members have a chance to get in. So EDU is actually a Chinese related stock. It's been riding the 200 for quite some time right now. And you can see here we have a double bounce off the 200. So I'm pretty confident that we should see higher highs going forward. So we went long yesterday, although today it doesn't look so good. So we'll just see what happens. It could just quickly recover as soon as the market finally bounces. And the other long that we took, WDR. So WDR, we had also gone long yesterday. Right around here, and it is somewhat riding the 200. We did get a bounce, and we also had this very large volume spike, which we really like. But WDR is not like our normal trade. So WDR had fallen quite a decent amount over the last few years. It had gone from about 75 down to as low as about, 14, 15 down here. But it's been horizontal for quite some time, and it looks like it's being accumulated by large institutions. It's just showing all the signs that it's possibly being accumulated. So we took a stab at it. We went long yesterday. Hopefully it continues up from here. Hopefully we don't stop out. But if it does hold, this is going to be a somewhat unusually longer term trade than normal. We might actually hold this one for about 6 months. We're expecting this to make a rather large game, anywhere between 50 and 100%. We'll just have to see. But that's 50 to 100% over a period of 6 months. But it's definitely a good buy and hold trade if it works out. All right. So so for the next few coming days, the market is still in correction mode. It's still going down. We are 50% long right now. So you're just going to have to hold through the pain. It won't last much longer. We'll get that bounce and finally go up. But we are 50% long right now, and as soon as we do see the bottoming going in, we'll start loading up on long positions. We could possibly go up to 100% or even 150% if we decide that it's good enough to go on margin. All right. So keep an eye out on new trades, most likely not Friday, but we should get some new trades coming in next week if the market does do what we expect it to do. So that concludes our trade report.